Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for June the 21st, the first day of summer 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We do have multiple ones. We do not know what the market's going to do. Therefore, we create plans based on who takes control once the RTH session gets underway, and then we execute the plan that best suits the market. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the trading day for our members. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So take a quick look at the news. We did just have Philly Fed come out. It came out at 19.9, expected at 28.9. Bit of a miss there. Same thing with all the other Philly numbers. Canadian ADP non-farm payroll came out slightly less than expected or was previously, and wholesale inventories came out a little bit better than expected. But overall, the news wasn't great. We went from testing the 71 area and back down towards what we have right now, which is a week low. We've got house price index month over month and year over year coming up in 12 minutes. 57 minutes, we've got Bloomberg consumer confidence. And then at 10:30, we've got natural gas storage. And then at 1 o'clock, we've got the 30-year tips. So there's not a lot of scheduled news. Mainly, this market is being driven by the tariff wars, the trade wars that are starting to heat up. So if we take a look at yesterday, we opened auction out of range, right inside of, right by a previous naked VPOC. We had an open auction out of range, pretty whippy action here, and then they came down, they tested the prior day range, dipped in, and right at our trade level, the trade area and the value area high, the buyer stepped in, fought the breakout, then they finally broke out, rotated us up, and went right to our trade area up here at 78.25. Remember that this was the scene of the crime of the Chinese tariffs that happened in the overnight session on Monday, that announcement, and then sellers took over, put in a lower high, and then we rotated back, and basically we fought the prior day range and created what I consider to be a pretty balanced day. Now, we closed back in the 71.25 area, with the area we just tested in the Globex, but we were unable to get back inside of the prior day. I want to just start with my daily routine. Every day I do the same routine. A lot of people think it's a futile exercise. I disagree. I think it's important to understand where we are in the different time frames. I start on a monthly and work my way down into intraday. I use a 9 EMA, 20 SMA. I'm trying to see where we are in the time frame in terms of the trend. Do we have good slope and separation? Is this trend strong, or are we challenging the trend by testing the 9 or violating and possibly starting a new trend by breaking the 9 and the 20? You can see beautiful upward trend, 14 months of one-time framing. February violates the one-time framing. We come down and we battle the 9, but we fail to close below it. And then in May and June. So far, we've bounced off of the 9 and we're getting the continuation. We don't even challenge the trend on the bigger time frame until we get back into the 2600s, around that 2668 area. Going to the weekly, it looked like we were getting a possible rollover. Broke below the 9 and the 20 twice, but then they took it back. And then so far, we've got this continuation pattern. We came back and tested the 9 EMA on the low of the week. The low of the week is 27.35.75 put in the Globex, and we've bounced off of that. And so far, we're holding the trend, but we've lost some slope on that move down. Going to the daily, we get this stair-stepping action up, but right now we're challenging the trend. We're below the 9 and coming down to test the 20, and if we break the 20, we could see another move down, and I'd be looking for a move down into that 27.18 area, 27.18 to 27.15 area if we don't hold above the 9, and the 9 is, I'm sorry, the 20 is sitting around 27.58.50. Going to the intraday, you can see that we are testing the 20 on the 4-hour, and we're below the 9. So again, we're seeing some weakness coming in. And then going to the 30-minute, you can see that we're starting to get a possible trend change on the 30-minute, and we're below the 9 and the 20. But let me just reiterate that we are outside of the longer time frame balance area. So we have this this value area right here that runs from around 27.46 down to 26.21. We came up and we got a shift of the microcomposite VPOC up into the upper distribution here. We accepted that price on the shorter time frame, and then we gapped up, okay, created balance. 2 days of balance, continued the auction up, got up into the 27.96. Now, the microcomposite VPOC was up here at the 27. It was at 27.91.92 area to begin with. So the sellers started stepping in, okay, and then it came down to the 88.75. And just yesterday, we talked about the fact that this shifted, the microcomposite VPOC shifted down. And we've got basically a triple distribution here. And we've already tested to the low side down here at the price where we accepted after the breakout of the longer time frame microcomposite. And we bounced, but the sellers stepped in again at the 78.80 area yesterday. We tried to rally in the Globex, and they went up and put a Globex high in at 27.85 and then in the European session they sold off, and now we're back below the balance that we're in, and there's really no, I mean, even though we've got a microcomposite, we've got triple distribution or multiple distributions with a very blunt profile on the composite itself. So we have undetermined fair value, and they're just chasing this back and forth and testing each side. And we're doing it with some OTF participation, but the large lots are seem to be the net sellers versus the small retail and the large spec. So right now we're inside of these two wicks, the wick from 2 days ago and the tail from yesterday, and we're likely to see some serious chop in this area as we fight this zone, this LVN zone right here at the 67.50. We put in a weak low in the Globex, so I'm looking for them to push down a little bit lower below the Globex low, which is around 60, I believe it's 62. The value area that we're in right now runs from the 92 down to the 6150. Our key line in the sand still is down here at the 4550. That's because it's the microcomposite value area high, and below that we're likely to take a bigger move down towards the balance that we just broke out of, down in the 272250, and I'm looking at the 2718 to 2715 area for reasons I don't need to get into right now. But the warning line today is going to be down here at the 6160 area, because we bounced and we're above this former microcomposite VPOC, and we're likely to chop in this area, in this blunt area of the profile. So the key areas to pay attention to today on the bigger time frame is the 2770. That's going to be our over-under line. Our warning line is going to be down here at the 6150 area, basically a break of the overnight low. And then the next target below will be 55 to 51. And then our key line in the sand is 45. Above the 70, look for them to rotate back up into a balance. What we need to do now is we need to come up and accept the 75. This is a negative signal right now until we get back and accept it and get back above. Once we're above, okay, they've accepted that price, and they're likely to go to the last place they tried to hold it, which is up here at the 88.50. It looked like we were going to do that overnight, but the sellers stepped in at the 85 area and in the European session and brought us down. So taking a look at the overnight session, it's pretty balanced inventory with multiple distribution zones. There's 23.25 points of range, and we got a high at 85.25. You can see that when we got up there, we had a Mr. Sneaky, and then they tried to hold it. And then when the European session opened up, the seller stepped in and brought us down. Note that we have OTF participation. The volume overnight is about double the normal volume. So the net sellers, if the OTF stay involved into the RTH session, look for them push down through. Our VPOC was down here at one point in time, down at the 64.75. It shifted back up as they were trying to rally, and then the news came out, and we failed off of the VWAP overnight, and we're coming back down into this Globex. We have a LVN right here at the 66 area. Sorry, let me just expand this a bit. At the 66. So watch this area coming into the RTH session to see if they get below it. And the target, if they get below it, is going to be down here at the 64. And then, of course, possibly coming down and breaking through our warning line down at the 60, 75, 61 area. Inventory is pretty balanced. So it's really going to be whether the OTF step in. If the OTF don't step in and take us lower, below the 61 or higher, above the 75, then we're likely to chop, okay, between the 73 and the 61 area and fill this in down here. So taking a look at the Renko, there we have opposing zipper measured moves right now. We have this big zipper measured move that was put in the on the open of the Globex. We come down. We've got a zipper measured move down to 27.59. So I'm watching that warning line or I'm really watching 66 right now. But if we get below the prior day range, 61 is a high probability to target. Now we came up and we put in a zipper measured move to the upside, which does not violate this. So when that happens, when you have opposing zippers, okay, the bigger zipper takes precedence, but you have to be aware of the fact that we could go up and test this 74.50 area and not violate the bigger picture. What it really means is there's two-sided action. The shorter time frame traders are active and they're just exploring. You can see multiple distributions. It's pretty ugly profile. So we should see some wild action today in terms of the of the opening range. So we have a overnight high up at 85 and a quarter. Our 20 period daily ATR is running at 2668. That's the full session average true range 20 period. So our downside ATR target is down at that 58.50, that 59 target on the zipper measured move. So we have range capabilities to get down here without expanding beyond the average true range right now. Our overnight low is 62. So the upside daily ATR target is all the way up here at the 88. And remember that the 88 area is where the VPOC was, the microcomposite VPOC was before it shifted down to 75 yesterday. So we're below that 65. The 62, the overnight low, this becomes our warning line. Oh, don't want it that way. It'll be pretty negative if we get below this today. Our over-under line is going to be the value area high and that microcomposite. What do I mean by over-under line? I'm more bearish, okay, as long as we hold below the 75. If we get above the 75, accept that price, then I shift my focus to the 88 area and a break of the overnight high at 85. Our overnight VPOC could shift, but right now it's at 68, so I'll put it there. Just might have to make an adjustment coming into the overnight. We've got the 67 low from yesterday. This, again, we're seeing this, this multi-distribution. We've got this low volume area right here, and that's why I'm saying we could get stuck just chopping between the 75 and the 62 area and filling this area in and getting stuck in these two wicks. So what is my main hypotheses? My main hypotheses are going to be equal because of the fact that we've got two-sided trading going on. Okay, and we're exploring above and we're exploring below. My Hypo 1 and Hypo 2 have to have equal weight. So with the fact that our inventory is balanced and we have what I consider to be a weak low, my main hypothesis is to open up in range or just out of range, a push up to test the value area, but somewhere between the 70 and 71, maybe even push up to the 75 if we can get and hold inside of the value, but I'll be looking for selling, okay, and this should actually encompass both the VPOC and the value area low. I'm looking for sellers to take in, push us down through to break the prior day low, take out this naked close and this naked VPOC, chop in this area, and then fail and push down into the 62, at which time we may get a late day probe down to that zipper measured move of 59 and test the daily downside ATR target. But between 62 and 58, I'm expecting the other side to take control, the buyers, and then rotate us up through and close somewhere between the 65 and the 71. That is my main hypo. My Hypo 2, which has equal weight, will be an open auction just in range or just out of range, but outside of value, definitely outside of value, and then a push down into 65, and then basically the same thing. I'm looking for buyers to step in between the 62 and the 58 and rotate us up into 75 and basically chop around that 75 into the close as we come up and accept that value for the possible continuation higher back up in towards that 2800. That is Hypo 2. Hypo 3 is a open auction in range, push down to 65, get a false breakout at the on the low side, rotate us up into the 75, make a trip through. I'd be looking for an 80% destination trade up into the value area high, chop around the microcomposite VPOC, and then find acceptance at that price and push up and break above the week open. The week open is 2780. and the key line in the sand above and push through to the overnight high and come up here between the 85 and a quarter and the 88 and close up here and possibly get the shift of the microcomposite VPOC back up from the 75 up to the 88 and a quarter. That is my Hypo 3. Hypo 4 is a breakdown day, open auction in range, push up into the 71 area, seller step in early, rotate us down, breaking through the yesterday prior range and coming down into the 62, and between 62 and 58, chop here, and then get a liquidation break and push through and come all the way down, okay, down here to test the key line in the sand and that microcomposite value area high on the breakout that we have. So those are my 4 main hypotheses. Taking a quick look at gold. Gold is seeing a move lower. We talked about the fact if we couldn't hold above the 83 and come back up into the composite VPOC, that we are likely to come down into the 73 as our next target, and that would be the first area to bounce. We did not bounce there. Well, we bounced originally, but now we broke back through it, and now we're moving lower, okay, and the next big destination is down here between the 1255 and the 50, with the possibility of going down even lower to the 1243.90. So there's going to be some opportunity down here to possibly buy for a longer time frame swing trade back up to test the 1295 to 1300. So the key levels today to pay attention to in gold is this 65 area. If we can hold the 65, I'd be looking for them to come up and test the 69. If they get back above the 69, back into the 73 to 76 area. And then if we can, chop in here and accept that, possibly a move back up into the 83. But I see weakness in gold. Risk is being shifted over to other instruments, and I see the possibility that we could. Now, key point to watch is we already have a $50 move in gold on this last fractal. So the average is between 38 and 43, and we're beyond that. So it's like a rubber band; it could snap, okay, and we just get a liquidation break down into that 1250 area. But if we can come back up and accept this 73, I would expect a move back up at least into the 84, 85 area. So that's going to complete our pre-market. As always, trade well, trade safe, and we'll catch you on the flip side.